Hi guys. Um, so I've been talking to a few people and I've been trying to explain that this rally in the Dow is not something to be sold. And they look at me in disbelief in this. You do find people who just want to sell something because it's gone up. But I think this even helped me to understand where we are in the scheme of things, and is the market overbought or not. So I thought I'll take you through what it is that the Dow's really doing, um, and specifically with regards to it being expressed in real terms. Okay, so if you could just give me a moment while I set up a few things. So the first thing I'd like to explain is what is it when you express something in real terms? Okay. So you can see here that in uh, February 2020, the Dow was trading at around, it had a high of 29,500, call it. And in March, we hit a low of 18,225. Okay. Now, this is 1 month apart. You can effectively say that these two prices are akin to each other in the sense that inflation, the amount of money that's in the world as produced by central banks, hasn't really changed all that much. Okay. And this is when you need to then express something in real terms. So once a significant period of time have passed, or central banks have taken action to create more money to support the economy, you cannot say that the prices then is the same as the prices now. And you have to then convert either the past price to be on a like for like comparison to the amount of money that is in circulation now, or you adjust the price now to be akin to the prices then by adjusting for the effect that money creation by reserve banks um, actually what to remove the impact, to remove the effect of it, just so that you get a like for like comparison. So to that end, let's look a little bit at what the Fed have done since February to now. So this is the Federal Reserve's balance sheet, and you can see that over here in March, they were, but oh, okay, let's go February 25. They had total assets of $4.1 trillion on their balance sheet. Okay. And that is the loans that they've given to the United States Treasury, right? Mostly. And the United States Treasury then use that money and they will push that into the banking system. And eventually that money flows into the economy and into other assets. Okay. So as the crisis develops, they start to respond a little bit slow off the mark, but by now here, this is when the Dow hit its low point. They keep on pushing it and keep on pushing it until they hit a high here of 7168 in June. By now, they are on 7243. And interesting that just looking at the levels graphically, it feels like this is lower than that, but the number says otherwise. Okay. So going to a spreadsheet now. We'll come back to these charts now in a second. But going back to a spreadsheet here, let's focus on the numbers here. So this is the Dow, as I said, um, back in February, and it was a high of 29,535. Okay. Then in November, after hitting a low of 18,186, we are finally back at the highs and slightly above it. But now this is not in real terms. Okay. So here's the two Fed balance sheet numbers. And what I'm going to do now to convert this, these two past numbers, I want to convert them into what are they on a like for like basis to today's Dow value, which is based on a Fed balance sheet of 7243. Okay, so you can see here, if I show you the maths, I calculate a factor and I say, okay, the Fed has increased its balance sheet by a factor of 1.74, or they've increased their balance sheet by 74%. All that money has gone into things like the stock market, other types of assets, even Bitcoin. This actually tells us that Bitcoin is as high as it is also because of this. Because where do people put their money when they receive it? They'll go and put it in something, either the Dow or Bitcoin or whatever. So, okay, we now know in order to get this number to that one, all I have to do is multiply it with this factor, right? That's what I do here. So I'm going to unhide the cell now. Okay. All I've done is to multiply the 4158 with this factor. So I can now do the same with this Dow value here and that one. All right. So copy. And now we have the Dow in the past, and we can say to ourselves, what would the Dow have been if the Fed had this much money on their balance sheet like they do right now? Okay. And that shows us that this recovery that we've seen is like the emperor's clothes. It is there to make us feel better, make us believe that something is there, which is not really there. The world hasn't recovered yet, mate. We are still looking down an economic condition that is going to be tough. And companies' valuations and everything like that would really reflect that. Compared to the past, things aren't as rosy as what it was then. And the numbers tell you the same thing. So the Dow fell 58% if you measure it like this. And it is at 58% of its highs. It fell 41%. Okay, 42. Now do the same calculation here. All right. According to this one, we fell 38% before the Fed actions started to support the market. So we haven't really made much progress in clawing back um, the negativity. It is all just inflation, asset inflation, because of additional money supply that the Dow has gone from 18,186 to 28,93. In real terms, we're still down in the dumps. So, should we therefore be scared of the Dow being at the level it is now? Should we say, okay, it can't go up anymore? Far be it from the truth, because if things really come right now and the money supply doesn't get withdrawn, then this number can only go up, right? It will start to approach previous highs, previous real highs of 51,000. So we have to watch this balance sheet of the Fed very carefully, because this is the withdrawal of that is what will then be resistance or a wind in the face of this progress that the Dow will be making. So, focusing on what's happening right now, okay, this is the other thing, seasonal rallies. Okay, so we've got the Christmas rally, and this is why I want to spend time on this, because I want a trading strategy for this month, right? I want to know, can I still rely on a pattern that's always been there? Now, this is slides from a Seasonax presentation that I received. It was put out on the web, and I took copies of the slides that I found interesting. And the Dow normally has a Christmas rally starting towards the end of October, and it will last right through to sort of, you can see sort of to the middle of January, because it will go up, it will continue to go up, and then there will be a pullback. Okay. And here they discuss the same thing in the DAX. Now, the DAX starts a little bit earlier and tops out a little bit earlier as well. So the DAX is a leading indicator of this um, the seasonal pattern. Here is a slightly different take on it, where they focused more from December 14 to January 4th, and they looked at the S&P 500. Again, just showing us that normally it's positive, with a few negative outliers, and this being the financial crisis in 2008. Now, the thing is, we've had our crisis already this year. I don't think we'll get another one right now, unless maybe from Trump um, and Biden fighting with each other. But I don't know what that can do. So anyway, this is my take on why the Dow should not be shorted and will continue to go up. So this is a buying opportunity in my opinion. Uh, this isn't a target, by the way. Uh, this is more just a trend line to see where the lows have been touching. So the first opportunity to draw a trend line, really. And yeah, that's my thoughts on the Dow. So I hope you